Welcome back to the Malaysia Money Matters show. It's December 18th, 2024. We're getting close to 2025. Things are really heating up in the Malaysian market. So in this deep dive, we're going to be focusing on uncovering those hidden gems, those that could turn into great investments for you. And of course, we'll also be kind of weaving in essential economic and political updates because you need that full picture, right?
Absolutely. It's all about finding the promising opportunities, but also understanding that bigger context that they exist in.
Okay, let's unpack this. Let's start with some exciting company news. Evergreen Max Cash Capital BHD, or EMCC. They really caught my eye. They're an Islamic pawnbroking company, and they are on a serious expansion kick, aiming for 80 outlets by 2025. But here's where it gets interesting. Their profits have absolutely skyrocketed in the last 9 months.
Yeah, and what's fascinating here is that this surge in profit seems to be driven by a few things. First, you have the rising cost of living, which is pushing more and more people towards these alternative financial solutions like pawnbroking. And second, there's this growing interest in Shariah-compliant investments. And EMCC just fits that bill perfectly. They're offering a service that's in high demand. And it aligns with Islamic principles, so it makes it attractive to a really large and growing segment of investors.
So EMCC could be a potential investment for you if you're looking for those companies tapping into new markets and experiencing that substantial growth. Now let's shift gears to a totally different sector, air fresheners. I know it might not sound all that thrilling, but trust me on this one. Vanzo Holdings BHD, or Vanzo, just debuted on the ACE market, which, by the way, is a market specifically designed for emerging companies with strong growth potential. And guess what? They're planning on releasing new scents and products every single year.
Wow.
Expanding their reach through retail kiosks.
This is a classic example of finding opportunity in everyday products. The Malaysian market has a really clear appetite for air fresheners. And Vanzo is aiming to really capture that market share through constant innovation. They're not just sitting back, they're actively creating new products, keeping things fresh literally. So for you, this could mean investing in a company that really understands consumer trends and is actively responding to them.
Now let's talk about something vital, water. Pengurusan Asset Air BHD, or PAB, is making waves with a 1 billion ringgit investment in 2 new water treatment plants in Penang. This is a big deal because Penang has been dealing with water issues for a while now.
Yeah, this is a significant development on a couple of fronts. First, it signals the government's commitment to tackling critical infrastructure needs. And when a government invests heavily in a sector, it often creates opportunities for related businesses. Second, this investment by PAB could position them as like a key player in the Malaysian water industry. And if we connect this to the bigger picture, the demand for clean water solutions is only going to increase globally, making this a sector to watch.
So potentially a good long-term investment for you. In a sector with growing demand, let's talk about another commodity with massive global reach, crude palm oil, or CPO. The Malaysian Palm Oil Council, the MPOC, is forecasting strong CPO prices, staying above RM 4,800 per ton.
Yeah, and they're pointing to the rising global demand for soybean oil, which is used in everything from food to biofuels as a key driver. Since soybean oil and palm oil are often substitutes, that increased demand for soybean oil is having this knock-on effect on palm oil prices. Now, this is important for you because Malaysia is a major palm oil producer. So the continued strength of CPO prices could mean good news for companies in this sector.
Okay, it's not all smooth sailing in the market. There are always bumps in the road, right? Genting BHD and Genting Malaysia BHD, big names in the gaming and resorts industry, have been hitting some rough patches. Their stock prices are near 4-year lows.
Here's the thing. They've faced a series of setbacks, from earnings misses to legal issues in the U.S., and this has spooked investors. What's interesting here is that some analysts are still recommending a buy, viewing this dip as a potential opportunity, but it's crucial to do your homework. Understand those underlying reasons for these struggles. Are they temporary blips, or are there deeper, more systemic problems? This is where your own research and risk tolerance come into play.
And speaking of risky situations, South Malaysia Industries, BHD, or SMI, is caught up in a takeover battle that's turned pretty messy. The potential buyer, Target One, is accusing SMI of trying to block the takeover by preventing an important shareholder meeting.
Yeah, this situation raises some red flags about transparency and corporate governance, which are crucial factors to consider before investing in any company. For you, this is a reminder that even seemingly straightforward investments can come with unexpected complexities. It's always best to err on the side of caution when you see those signs of potential trouble.
Let's zoom out a bit and look at the economic and political landscape. Fitch Ratings just reaffirmed Malaysia's long-term issuer rating at BBB plus ISIN, with a stable outlook.
This is good news for the overall investment climate in Malaysia. It means Fitch sees the country as having a relatively low risk of defaulting on its debt. They're optimistic about Malaysia's economic growth potential, the level of investment coming in, and the fact that it has a current account surplus. However, they also point out the country's high public debt and its relatively low revenue base as areas that need attention. So for you, this means Malaysia remains an attractive destination for investors. But there are some underlying economic challenges to be aware of.
Now here's a policy development that could have a ripple effect across various sectors. The government's exploring a comprehensive new policy on plastics. This could impact everything from manufacturing to recycling.
Right, and this is part of a global trend towards sustainability. And for you, it presents both challenges and opportunities. If you're invested in companies that rely heavily on plastics, this policy could impact their operations. However, it could also create opportunities for companies involved in recycling. And the development of sustainable alternatives to plastics.
The multi-tier levy mechanism, or MTLM, is another policy generating a lot of buzz. The Federation of Malaysian Manufacturers, the FMM, is urging the government to provide more details about its implementation, as the uncertainty is causing concern among businesses.
Right, so the MTLM is designed to restructure Malaysia's labor market. It's essentially a system of tiered levies on businesses that employ foreign workers, with the aim of encouraging companies to hire more local workers. Now the delay in releasing the details is creating uncertainty, which isn't good for businesses or investors. Companies need time to adapt and plan for these changes. So for you, this means keeping an eye on this policy and how it unfolds, as it could have implications for labor costs and potentially affect the profitability of businesses that you might be considering investing in.
Meanwhile, there's some exciting news in the infrastructure sector. The Transport Ministry is pushing to fast-track the development of the Malaysia-China rail network. They believe this could significantly boost regional trade and create a whole wave of new investment opportunities.
Infrastructure projects like this can be game changers. Improved connectivity, which is what this rail network aims to achieve, can drive economic growth, attract foreign investment, and create jobs. If this project moves forward as planned, it could have positive ripple effects across various sectors in Malaysia. For you, this could mean looking out for companies involved in construction logistics, and even those that stand to benefit from increased trade. It's definitely a project worth watching. Now, shifting gears a bit, let's talk about some political developments that could impact that investment landscape. C4 Center, an anti-graft watchdog, has been pretty vocal in its criticism of the Attorney General's chambers for dropping the appeal against the acquittal of Deputy Prime Minister Datuk Seri Ahmad Zahid Hamidi in a corruption case.
Oh, wow.
Yeah, they're raising concerns about transparency and accountability within the legal system. They're arguing that the dual role of the Attorney General, as both the government's advisor and prosecutor, can create these conflicts of interest, especially in high-profile cases like this.
So this is a pretty big deal, because it kind of raises questions about fairness and impartiality.
Right, exactly. And this situation really highlights the importance of a strong and independent judiciary for investor confidence. When there are doubts about the rule of law, it can make investors hesitant to put their money in.
Yeah, that makes sense. On a less controversial note, there's a new Yang Dipertua Negeri of Sabah, Tun Musa Aman.
Right, and this change in leadership could have implications for the state's political and economic direction. It'll be interesting to see how this all unfolds and what it means for potential investment opportunities in Sabah.
Okay, so let's take a look at what's happening globally, because as we know, events on the other side of the world can have a direct impact on Malaysia. China's making some interesting moves, extending visa-free transit stays to 10 days for travelers from 54 countries.
Yeah, this is clearly aimed at boosting tourism and economic activity. China's sending a signal that it's open for business, wants to attract foreign visitors and investment. And this comes at a time when they're also facing pressure from the U.S., with the looming threat of those increased tariffs under the incoming Trump administration.
And we're already seeing some of the fallout from those trade tensions. China just recorded its largest capital outflow ever, as investors worried about the uncertainty are moving their money to what they perceive as safer havens.
Yeah, this capital flight, it's a stark reminder of how interconnected global markets are, and how political decisions in one country can have ripple effects across the world. For investors, it underscores the importance of diversifying portfolios and carefully assessing those geopolitical risks. It's not just about looking at company fundamentals, you also need to understand those global forces that can impact your investments.
Speaking of diversification, many investors are always curious about what's happening in the U.S. market. What's the latest?
Well, there's a mix of signals coming from the U.S. economy. On the positive side, retail sales figures are better than expected, suggesting that the American consumer remains resilient despite inflation concerns. However, industrial production has dropped for the third consecutive month, which is a bit worrying.
It's a bit of a mixed bag there. What about Europe? Any notable developments?
Yeah, the European Central Bank is taking steps to kind of shore up the banking sector. By slightly raising capital requirements, they're citing heightened risks due to geopolitical tensions and other factors. They're also trying to streamline the approval process for significant risk transfers to improve the stability of the financial system.
All very important moves that could have repercussions for global financial markets. Now let's swing back to Asia.
Yeah.
India is making headlines with its One Nation, One Election bill.
This is a really bold move by the Indian government. The idea is to streamline their electoral process by holding national and state elections simultaneously. Proponents argue it would save money and reduce disruption. However, opposition parties are raising concerns, claiming it could potentially undermine the democratic process.
Interesting. A lot of moving pieces there. Now things are heating up in South Korea. Apparently investigators are running into roadblocks in their probe into President Yoon Suk-yeol's attempt to declare martial law.
This political drama highlights the importance of checks and balances in democratic systems. The outcome of this investigation could have significant implications for South Korea's political stability, which in turn can impact investor confidence.
Okay, before we wrap up this section, I wanted to touch on something a little lighter, but still relevant to the investment world. The bubble tea craze is showing no signs of slowing down, and this is creating some interesting opportunities in the market.
Yes. Several Chinese bubble tea companies are reviving their plans for initial public offerings, or IPOs. They seem to be encouraged by signs that Beijing might be easing its grip on market regulations. This comes after a rather disappointing debut by one of the industry's big players earlier this year.
So it seems investors are still thirsty for a piece of that bubble tea action.
They are, but it's a good reminder that even the hottest trends come with risks. Thorough research and a realistic assessment of the market are crucial before jumping on any bandwagon. Whether it's bubble tea or anything else, it's amazing how all these stories, from bubble tea to international politics, it all interconnected.
Yeah, it really paints a picture of how dynamic and complex the global market is.
It really does. So as we wrap up our look at the Malaysian market and the global forces at play, what are some key takeaways here?
Well, even with all the uncertainty in the world, it feels like Malaysia still has plenty of potential. We talked about EMCC and Vanzo, two companies tapping into those growing markets and seeing real success.
Right. And let's not forget PAB and the water treatment plants. That's an investment in essential infrastructure, something that's always in demand. Plus, with the global focus on sustainability, that sector could see even more growth.
And then there's the CPO market. Malaysia is a big player there. And with global demand staying strong, it could be a good time to explore opportunities in that industry.
Absolutely. And this is crucial. You always have to balance that potential with the risks. Doing your due diligence, understanding the company and the sector, and that broader political and economic context is non-negotiable.
Yeah, we've seen how events, whether it's a political scandal or a trade war on the other side of the planet, they can have a real impact on investments.
They can. So here's a question for you to consider as you explore these opportunities. With China making these bold moves in the global market, will Malaysia rise to the challenge or get left behind? Will they attract that investment, foster innovation, and compete on a global scale? It's something to think about as you map out your investment strategy.
It definitely is. Until next time, stay curious and happy investing. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.